Yes, in this video, for all you unprofitable traders, because at the end of the day, if you're still watching or learning new strategies, you're not profitable. Because if you were, you wouldn't be in this video. Or maybe you just like my face. But for those of you who are still unprofitable and want to make a fuck ton of money in 2025, I'm about to show you and walk you through how you can spot the places, the S&Ds, the supply and demand zones, where institutions or smart money or the bigger money will have the most amount of orders, and in where you will most likely find bounces in the market or movements in the market to then go ahead and enter your trades, either longs or shorts, and make a lot of money. As always, I'm going to keep it simple as fuck. So as we all know, there's only two types of markets, really. I mean, yeah, some people are going to say, oh, what about when it's going sideways? Okay, well, there's going to be a time frame where shit is not going sideways. So just for the overall and the sake of this video, there are only two types of markets. One that goes up and one that goes down. So in this case, we have a bullish market. How do we know it's a bullish market? Because we have our protected highs, protected lows, protected highs, protected lows, protected highs, and protected lows, protected highs, and protected lows. But these are not only that, but they're also higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and are being set in motion due to the fact that our previous protected highs gets broken, and a new one gets established. And the same thing with a bearish market. We have our highs and lows and we have our lows, our highs, lows, highs, lows, highs, lows, highs. But instead of having higher highs and higher lows being established, we have lower lows and lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs being established. And of course, we get our protected lows broken and new lower lows, lower protected lows get established. Okay. Now that we understand that, where in all of this movement are we supposed to look for entries? Where are the institutions going to be placing their orders for when they want to manipulate price to go lower for some reason or to go higher to then take it lower? And that would be we know that by using S&Ds. I will go ahead. I know a lot of people use them, but not everybody has a lot of rules that actually make sense. And I have found that these, the ones that I'm about to show you in the next, 10 minutes, if you actually lock in and want to become profitable, are the ones that are most likely to get the mitigation or the tap to then bounce and deliver either to a new protected high, to either mitigate to then take out the previous protected high and make a break, or to either, of course, make a new protected low. But yeah, so it would technically look something like this. We have our S&D. In this case, price doesn't come back and touch it. That's fine. In this case, if this was our mitigated S&D, it would not come back and touch it. But in this case, it would. And then we'd get our delivery. And entries would, in a way, look like this. Pow. That's it. And the exact same thing, this would be with demand zones. Now, with supply zones, it would be the opposite way. We would have it like that, looking for the tap. And if we don't get a tap whatsoever, we do not enter. I would not touch it or even look at it if there is no tap. And this would be our delivery right there. Now, I'm going to go over some examples on how to find these in just a second. Okay, now let's look at some examples in real time. So for this one, we're going to start with a bullish market right here. And we're just going to focus on what's going on from this high to this low. So we see that we're getting a bunch of, let me zoom in a little bit. We see that we're making higher highs and higher lows and getting the breaks, and new higher lows being established. Another low, another low, another low. Okay, now that we have that, what do we look for? We look for the deepest unmitigated S&D, which would be the candle closest to the protected low that gets established after the break. So in this case, we get the break, right? And then we have the low that gets established right down here. And we make sure that that candle has never been tapped right after the break happens. And in this case, this would be the unmitigated S&D because after price left it and had the break, it never came back to it. So this would have been the play. In this case scenario, we did not get the tap. So this play never happened. Now we can move over to the next one. Next break. Okay. Look for the unmitigated S&D, which in this case, it would be this one. But lo and behold, here, let me change the color of this because I don't think you guys are going to be able to see it. Lo and behold, we get nothing here. So no tap. That's completely fine. Now we look for the next break. Boom. See how price is moving with the way we want it to move, you know, with our bullish bias. But we still don't get the tap. So what happens? We don't touch it. We just respect the rules. That's it. Now in this case scenario, we also don't get the tap. So we just wait. We get our new break and we see if we can get a tap from the unmitigated S&D. And in this case scenario, lo and behold, we do get our tap here and we take the entry, put our order right there, stop loss just a little bit higher so we get tapped in. It would have been like that, stop loss below low, and that would have been an easy 1 to 3. Okay, easy example. See, we don't complicate shit here. I keep it the way it is, simple. And that's how trading should be. So that whole move, we didn't touch anything. Yes, we could have made a lot of money. It doesn't matter. We just have to catch what the rules show us. If the rules are not being respected, we're not going to be in the trade. I'm going to take this time. If you got all the way here, make sure to leave a comment if you're fucking with the videos, or, you know, asking any questions that you may have. I always answer all my comments. And then also, if you want to become one of my students and really go into depth into this, if you fuck with the way I trade, then just head over to 3mtrading.ca or check the links in the description. Send me a DM on Instagram and I got you. Okay, now we're going to look at the other side of the coin, which is a bearish market. For that, should we use this? Fuck it, we'll use this. This is it's just dying. So for this case scenario, we're just going to go over here. And as soon as we switch to bearish, which was at this break right here, you can see there are new lower lows being established and lower highs being established. So we get our first break right here. Okay, now we check for the last unmitigated S&D. Is not this one. This is also mitigated. Okay, and it would be this candle right here. And we're going to zoom in a bit because you guys can't really see. So it would be this candle here because price, after the low gets established, right? The high gets established. This was the last candle that price, once it closed out of it, it never came back to it. So this ends up being our S&D. Now we put our entry right here. Stop loss. Ooh, that's big. Stop loss right here. And we would have gotten stopped out. But because it's still inside of the S&D and we're still valid. What the fuck just happened? And we're still valid to look for entries. We would have then, okay, first loss, that's fine. And then right after we put, why the fuck is this so fucking big, bruh? This pisses me off. Stop loss above the high of the S&D, and this would have been our entry. Lo and behold, it ends up running more than 1 to 10, and that is it. That is how you find the deepest unmitigated S&Ds in a range of a protected high, protected low, in either a bullish market and a bearish market. That's how easy it is. There's nothing else about it. Of course, you have to put it all together. You have to know your bias, your higher time frame bias, and everything else. But for the most part, you can go ahead and look at this and really just look at it on your own charts. See what the 3 day is doing. See what the daily is doing. And go ahead and draw your S&Ds. And you're going to see the bounces. You're going to go see the tops and then highs, protected highs getting ran, or protected lows getting taken out. But as always, thank you for watching. That was really the video. I'm not here, you know, to get it all fancy, because trading should not be fancy. Leave a like, leave a comment if you like the video, or if you have any questions. To become a student, you already know where to go. Hit the subscribe and the notice. Thank you for watching. Peace out.